While we discussed about introduction to GST and what GST is, we now move on with our next module, which is features of GST. First and the most important feature of GST is that it is a concurrent dual model of GST comprising of central and state GST to be levied simultaneously on the same tax base. This means that CGST, SGST and UTGST is levied on intrastate transactions and IGST or Integrated Goods and Services Tax is levied on interstate transaction. It is to be noted that IGST equals to CGST plus SGST. That is, Integrated Goods and Services Tax rate would be equal to Central Goods and Services Tax rate plus State Goods and Services Tax rate. So what do you mean by interstate and intrastate transaction? Intrastate transaction is a transaction wherein it happens in the same state. For instance, there is sale of goods from Mumbai to Nagpur. This would be considered as intrastate transaction since both the parties involved are in the same state, that is Maharashtra. Interstate transaction, on the other hand, is a transaction where both the parties are in different states. For example, there is a transfer of goods from Mumbai to Bihar. This would be construed as interstate transaction. Import of goods in India is liable to IGST, that is Integrated Goods and Services Tax. On the contrary, exports of goods are exempt from tax, that is they are zero rated, same like the current tax regime. Another important feature of GST is that computation of GST would be on the basis of invoice credit method. This means that input tax credit would be allowed on the basis of invoice issued by the supplier. Next feature is that central GST and state GST are to be paid to the accounts of central and states separately. And lastly, input tax credit set off between CGST and SGST is not allowed. Set off between CGST and IGST and SGST and IGST is allowed under GST. Another important feature of GST is that it will use HSN and SSC codes to classify goods and services under GST. So let us understand what is HSN and SSC. HSN stands for Harmonized System of Nomenclature applicable to goods. SSC stands for Services Accounting Codes, which would be applicable to services. In India, manufacturers under GST will be required to follow a three-tiered structure of HSN. That is, manufacturer with a turnover of less than 1.5 crores not have to follow the HSN. Those with a turnover exceeding rupees 1.5 crores but less than 5 crores would be using the 2-digit HSN code, and those with a turnover exceeding rupees 5 crores will be using the 4-digit HSN codes. Further, any dealer who are into imports or exports will have to mandatorily follow the 8-digit HSN codes. We now discuss the rates of GST. So GST rates can be broadly categorized into 5 baskets. The first one being the nil or the zero rated goods and services. Next is the 5% rate on necessity goods and services. Then comes the 12% rate on merit goods and services. Then there is a generic rate of 18% on generic goods and services. And finally, 28% rate on demerit or luxury goods and services. While we saw the GST rate, let us understand the rates with the help of examples. 0% goods and services would be exports. 5% would be like food grains. 12% would be like textiles. 18% would be like sewing threads. 28% would be cars and bikes. So these were the brief features of GST. In the next module, we will discuss about the registration process under GST.